Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Blue Jet Healthcare. It's a company which is into specialty pharma, healthcare ingredients and intermediaries, and also into APIs. Uh, it is coming out with an IPO which is priced between 329 to 346. It's nearly 14% equity, which is all through offer for sale by the promoters, and the company is valued at a little over 6,000 odd crores at the upper end of the valuation. And joining me is Shiven Arora, who is the managing director of the company, and Ganesh Karuppannan, who is the CFO of the company. Gentlemen, thank you very much for joining us on BQ Prime. Uh, my first question to you, Shiven, you're in such a specialty business and is a niche business. Uh, you are coming with a IPO which is million OFS. Is it only because you want to list? What was the reason? Because you're not raising any funds for your for future growth.
Firstly, Sanjeev, thanks for having us. So the main purpose of this IPO is to definitely gain visibility in the market. The segments that we operate in are highly specialized, and as a company, we've been able to grow quite sustainably over the past 3, 4 years. And to maintain this growth, we thought that it's the right time to get the right visibility, attract the right talent, and continue the growth momentum.
Hmm. Give me a sense of the industry you are in for the layman and the investors. If you can lay down what the business model is like, what kind of products that you make, how where is it used, so that they can relate with your products.
Yeah. So we are in three major product categories. One is contrast media intermediates. So this services the medtech industry, which is for the diagnostic industry for CT scans and MRIs. So we make a part of the dye that goes into the body to enhance the visibility of organs, tissues, blood vessels. And these are very life-saving scans, which is about 70% of our business, all export-led. The other vertical is artificial sweeteners. These are high-intensity sweeteners that find its application in oral healthcare, beverages, and also pharmaceuticals, which is about 20% of our business. And the third vertical is again a pharma intermediate business for next generation medicines. And we make intermediates with a few innovators. And bulk of our business, more than 70% of our business is in regulated markets such as Europe and the US.
Yeah. So Ganesh, before I get you in, you can you give us a sense of what is the kind of global growth expected in these segments uh, when you talk about contrast media intermediaries. uh, you are one of the kind of companies which is there, and you don't have a peer as of now in the Indian listed market, though there are many pharma companies which are entering into this space. How do you see this segment growing?
As per IQVIA, contrast media is expected to grow at 6 to 8% in the next 2 to 3 years. And we do expect a double-digit growth in saccharin uh, in the near future. And we see enough opportunities both in contrast media as well as in the saccharin segment.
Mhm. Um, Shiven, pharma API and ingredients, that's a relatively new business, 4.5% of your revenues coming from there. How do you plan to scale up that business? What kind of investments are you planning on that?
See, I mean, as a segment, it's been categorized differently, but in essence, contrast media intermediates and pharma intermediates is a CDMO model
Hmm.
targeted towards innovators and multinational generics.
Hmm.
So for us, I feel that in the pharma intermediate space, the overall addressable opportunity is much larger.
Hmm.
But our approach is very selective. We are working with select innovators and being strategic to some of the candidates that we produce.
Hmm. Uh, you know, Contracts media, when you look at that market, you're primarily supplying to three of the top four companies, GE Healthcare being one of them, and other. So, what is the kind of uh, model shift? Is there any growth? Because I think Ganesh mentioned that it's going to grow at 6 to 8% or so. Uh, how do you see the potential in India growing? Because while in the US or European markets, it's much more developed in terms of sophisticated healthcare. and so the use and the requirement is higher. In India also, that sophistication is coming in. So how do you see the Indian market growing and the opportunity that you see here?
See, I think you're absolutely right, Sajid. I think in most of the developed healthcare economies, I think the diagnostics solutions is quite widely available. But you're right, in India and other emerging markets, we see good growth momentum. Our sales are to these innovators, which are based out of US and Europe, but they in their respective geographies make the APIs and formulate it for the world market. Over the past few years, these companies have also invested heavily in medical devices, and this is actually propelling the growth and the usage of contrast media uh, as an overall solution.
Hmm. Is there a way you can integrate it forward or backwards in this space?
So, I mean, 2 decades back when we started contrast media, we started making the basic intermediate that finds its application in most of the key contrast media APIs. We built a lot of relation and credibility with these top four global leaders. And today, over the past few years, we've been able to forward integrate into advanced intermediates. Still, by and large, most of the API and formulation manufacturing is closely held by these global leaders. But in the past few years, we've seen that this forward integration to advanced intermediates has not only improved our efficiency as a company, but also the net realization per kgs has improved significantly. So there's enough and more room to forward integrate to more advanced intermediates and be more strategic in the overall growth journey of this segment.
What about getting into APIs yourself? Because you have your R&D as well. Uh, how do you look at that opportunity? Is there a opportunity at all for you to go into that kind of manufacturing? Because that will be a very high margin business for you from here.
I think as per IMS IQVIA, this segment, contrast media, is closely held by these four companies, and they have global leadership of more than 75% collectively for the past 10 years, which
Hmm.
means it's very different than a pure pharmaceutical play. This is for the medtech industry, highly specialized life-saving scans. And I feel that if there is a need by our strategic partner to further forward integrate, we will do so. But we
Hmm.
see um, just being a small partner in the entire growth journey will help us grow much faster than the average industry growth rate.
Hmm. Uh, if that is a scene, Shivan, then you are basically guided by your global partners and the growth rate that they are looking at, right? In that sense, how do you break away from that growth rate and grow at a much faster rate?
See, I feel that globally, the way the diagnostic industry is expanding, and there are many enough and more articles supporting this. The sheer availability and accessibility of these CT scans and MRIs is increasing exponentially.
Hmm.
And being fully backward integrated for us as Blue Jet Healthcare, there's enough and more headroom to expand.
Hmm.
And like I said, we are a CDMO company. We sell our capabilities and then start producing it.
Hmm.
So we would like to be strategic to these end customers. And I see them expanding more API capacities in their geographies.
Hmm.
So, which means potentially some intermediate business can definitely flow to us.
Hmm. Ganesh, give me a sense of what kind of relationship that you have with these top guys. Is it long-term agreements of supplying, intermediaries and ingredients to them?
Our relationship with key customers ranges from 4 to 24 years. And for with select customers, we have long-term relationships, which contracts which go up to 5 to 7 years, and where the for, we also get an annual forecast from every one of the customers for us to plan for the capacities and production.
Hmm. And does it also include the volumes and the pricing that comes in?
Exactly. In an annual contract, they actually give the total forecast as well as the pricing.
Where is the pressure on pricing coming in? Because EBITDA margins have fallen from FY22 to FY23. from 36 odd percent to 30 odd percent, if I'm not wrong. Uh, 30, yeah, 30 odd percent. So where is this pressure coming in from for you?
Between FY22 and 23, the chemical prices had a significant increase. I think this impacted the entire pharmaceutical as well as specialty chemical industry. We also
Mm,
got affected by high price increase.
mm,
This impacted FY23 margins to the extent of 6%. Uh,
mm,
I can also add ocean freight. If you recall, that also went up between 22 and 23.
mm, mm,
These two factors, we are actually seeing a trend reversal in this current financial year.
mm,
Chemical prices are easing up a little bit, and even the ocean freight is going back to 22 levels. We
mm.
expect we will have a healthy EBITDA margin in FY24.
So does your agreements with these suppliers don't factor in cost increases and freight increases?
Uh, there are certain chemicals where there is a pass-through mechanism or uh, the price fluctuation is absorbed on a particular percentage.
Okay.
But
Does it
on
come with a
these,
lag or is it immediate?
it is immediate actually.
Okay.
And on the basic chemicals, there is no pass-through mechanism.
So what percentage of your revenue would be adjusted for this inflationary pressures?
More than 60 to 70% of the raw materials,
60 to 70% of the raw materials,
raw
basically.
material purchase.
And what you supply to your vendors or OEMs, are they also passed through?
Yeah, just like the end market, um, on the customer side is very consolidated. On the supply side too, there are only very few key players globally
Hmm.
in these
Hmm.
intermediates. And having relations with these companies for more than 10 to 20 years, these discussions are just a call away because we
Hmm.
are more strategic partner to them.
No, I mean, it's not reflecting in your numbers. That's why I was saying that, do you have adequate provisions to pass through all these extraordinary inflationary pressures across to your final client?
I think by and large, the segment that we operate in is resilient enough to pass through these. But certain things that happened last year, Ukraine war, energy prices, certain raw materials that we import from Europe, the prices increased significantly.
Hmm.
Having said that, Q1 FY24, we were able to renegotiate and come back to our existing margin levels, which were there
Hmm.
reflecting in FY22.
Ganesh, give me a sense of what's happening now because we have this Israel Gaza war which is going on. Suddenly, we have seen maritime rates also going up, container rates also going up. Uh, are you seeing the same thing at your end?
We have not seen the impact as of now, but we need to wait and watch how this turns out in the next couple
Because
of
the shipping rates are going trending up. So, is that going to have an impact going forward?
It will not be a significant impact for us.
Okay. Give me a sense of also your revenue share because largely 88%, 85% of your revenues come from overseas markets, Europe and US being one, being the largest one for you. India only, I think 13% odd comes from India. Uh, how do you manage your foreign currency and cross currency headwinds?
We are a net exporter and we take a 6 months forward contract. And rupee being a depreciating currency, we take advantage of the forward premium what is available in the market.
And what is the so it's just 6 months of revenue that you hedge every time, is it?
Yeah, we go up to 180 days.
180 days. Uh, how do you, what is the kind of, plans that you have, Shiven, for the pharma API market? I know you told us that it's almost part of the same CDMO, but you have, bifurcated that in your revenue, and you have started off a new venture for pharma APIs. What is the kind of investments that you have planned, and how do you plan to ramp it up?
Hmm. So in pharma intermediates, our approach has been very selective. We are on the chronic segment in the oncology, CNS, and cardio health. Um, Fortunately, some of the candidates that we were tracking in phase 3 have gained marketing authorizations.
Hmm.
So we see a significant ramp up with in terms of the growth journey of our end customers.
Okay.
And we feel that the clinical data backing these new products is quite positive, which gives us comfort in turn in terms of adding capacities. And we have a strong capex plan which is ongoing. Um,
Hmm.
Historically, since 2018 to 2022, we were able to quadruple the reactor capacity from 230 KL to today 1000 KL.
Okay.
In the next 24 months, we are adding another 50% to this reactor capacity. And as a CDMO business, both in contrast media and pharma intermediates, these molecules are very strategic. And in some cases, the plants that we have are co-engineered with our end customers. So there's a lot of knowledge share which happens because once we scale up this molecule at an intermediate level, our win is our customer's win. So we discuss and execute things most efficiently uh, in across segments.
So when do you see that revenues coming in? Since you said a lot of couple of your end clients marketing have got marketing approvals, when do you see that commercials the the molecule going commercial and hence your production increasing for those molecules?
We see some traction over there, and there's a positive traction, is what I can comment at this point in time.
Is there a timeline for that? Means 1 year, 2 year, 3 years. That's when you see.
Some candidates are already approved, some are awaiting approval. So I see that over the next few years, you will see significant traction in this segment too.
Mhm. You briefly mentioned about the increasing capacity, Shiven. What is the kind of investments that you plan? Uh-huh. Ganesh, you can answer that if you.
Yeah. See, today, we are not disclosing this number because the issue proceeds is more on OFS. But whatever capacity addition we are planning in the next 2 years, we should be meeting out of our own internal accrual. And roughly,
So give me a sense of what is the kind of free cash flows that you generate on a yearly basis.
free cash is around 65 crore. And we also have a cash and investments to the tune of 270 crores as of date.
Okay. And you'll use that to expand your
Exactly.
existing facility.
Yeah.
Uh, and the entire thing will come up in the state of Maharashtra because that's a state concentration that you have today, right?
Everything will be in Maharashtra.
You don't look at any other geographies.
We are definitely exploring from time to time, but definite agreements have not been signed off at this point in time.
Hmm.
Having said that, the capex plan is very strong, robust. We are a debt-free company. Our OC margins have been north of 30%,
Hmm.
and asset turns historically have been about 5.6x. So I think we are investing in the right product categories.
Hmm. And one of the things that which is little while you supply to top four players in the contrast media market, the the largest client of yours accounts for nearly 63% of your revenues. Uh, is there a way you can diversify this further or bring down the exposure?
Honestly speaking, I find this the biggest strength of the company because I would say 70% or more of the contrast media revenues is backed by multi-year supply agreements. And as a segment, we are working with the global leaders that have done imaging for the past 100 years.
Hmm.
So I feel that having the stability in the order book gives us more visibility to plan for the future.
Hmm.
Having said that, the other key players in contrast media are increasing the exposure from an offtake standpoint from us because of the huge base in terms of the intermediates that we offer. And there's a strong pipeline as well on the contrast media intermediates, which are in this long approval cycle. Sajid, we'll have to appreciate this segment because this is a very high dose injectable that goes into the
Hmm.
body. So it has there's a lot of regulatory burden for our end customers also and for us, even at the intermediate stage.
Hmm.
So there are many intermediates which are in the approval cycle, which will help us navigate through this concentration. But having said that, we still feel that this is our largest strength.
How do you see competition coming up? Because I've heard about domestic players in the CDMO market now looking to enter contrast media, DVs being one of them looking to enter that market of. So how do you see competition, domestic competition coming in?
See, we will not be in a position to comment about the competition. We are primarily a intermediate player. So today, like our core strength is starting from building block, we actually go up to the advanced intermediate. And we have enough opportunities in this particular space. Maybe I'll just take you through the total market share. If you exclude North America, Europe, China, and Japan, these geographies account for almost 81% of the contrast media. The rest of the world is hardly 19%. There is a huge opportunity for everybody in this market. The way it is growing, we believe our market share will be intact, and we cannot compete about the competition.
Mhm. Ganesh, my final question to you is with respect to sourcing of raw materials. Uh, you source from China and majorly from China and two other nations, including India. How do you look to reduce this dependence on China? Is there a way you're looking at to look at alternative supply chains so that there's no hit on your margins or on your revenue?
We are technically not China dependent. Our key raw material is coming from Europe. We will be actually doing a backward integration. Starting next financial year, we will be making this particular raw material in-house. Thereby our dependency on imports itself will substantially come down. So most of our raw materials will be sourced in India, barring very few items from rest of the world. And this would actually like minimize the volatility what we are facing currently. That will actually get eliminated, and we will be in complete control of our raw material prices starting from.
Yeah. Gentlemen, it was a pleasure talking to you today. Your IPO is coming out on October 25th, closes on 27th, price between 329 to 346. It's an OFS for 14% equity. Largely, the promoters are selling shares in the market. And as I said, the IPO opens on October 25th. Thank you very much for joining us on IPO Adda on BQ Prime.
Thank
Thanks,
you.
Sajid.